I represent the rent that's too damn high party.
And I represent the market's too much work party. It really is. This is just, I'm sorry to whine, but this is just too much work. It's not worth it. I mean, today is a great example of this because what I would like to do is set my positions, update my stops, go on my merry way, do other things. Instead, in a market like this, I have to be like completely glued to my screen in order to eke out a little profit at the end of the day. I was like jumping in and out of GDX and all kinds of other things today, along with my regular positions, and managed to scrape together a profit for the day. But good grief, way too much work. Way too much work. Just too much. It's a very skittish market. Skittish, terribly skittish. So yeah, too much work for the reward. Looking at the ES over the past 120 days, we can see here the delicious but all too short-lived plunge. That really shows how briefly, the bear market in quotes lasted from July 24 to August 8th. I mean, how many trading days is that? 6, 7? That's how long we were allowed for reality to set in. And since then, the powers that be have been struggling to inflate things again. We had this huge dome here. So again, this is, to my mind, is very simple. All the up motion is just artificial inflation, and all the down motion is gravity. That is us, reality, the inhabitants of the blog. So it's a huge struggle. We're starting to win the war, and then they get the upper hand with a multi-trillion-dollar euro bailout. And again, so huge. And then again, they know none of that, bears. Hold it right there. We're going to do this again. Oh, up we go again. So it's this tug of war, back and forth, back and forth, back and forth. To the bulls' credit, we got a higher high and a higher low here. I guess the most cynical folks would say, and there might be some credence to this, that until the presidential election is over, which is a year, about 11 months off, the minions in Washington will keep things artificially inflated. I don't know. I don't want to wait that long, but as has been proven, my desires really don't have a heck of a lot to do with what this market does. So anyway, looking at today's action more closely, just really agonizing, because we had yesterday we had the really cool event of the S&P downgrade, and that actually kept kind of working its way lower until about midnight New York time. And then for whatever stupid reason, I guess between Geithner saying yay to the euro bailout and the notion that, well, this thing's actually going to work and it's going to stick, this thing rose higher. And it was really starting to kick up some strength here. And just out of nowhere, I mean, I was watching at the time, and I thought it was a bad quote. Out of nowhere, especially the IWM, just fell to pieces. Let's take a look at that in particular. IWM. So it just was flying, and it started to ease, and then boom, this happened, and then it just completely fell to pieces. So the vast majority of the day's gains were wiped out in a very short order. And that's why I am talking about the frustration of this market. Not just the bears, but the bulls as well. Because you can imagine there's every good reason to be buying at this level. There's momentum, there's strength, there's resolution. And then, so, I mean, these are real buyers, these are real executions, and boom, knife in the eyeballs. So it's no surprise to me that the retail market for trading is approximately zero. They've all abandoned it. You can't blame them. You just can't blame them. Because, you don't understand this. We're experts, relatively speaking. I mean, no matter how modest you might be about your own trading abilities, the fact you're listening to this at all indicates that you're fairly serious. that's going to kick you to the 70th to 80th percentile right there. And some of you I know are like way above me in terms of sophistication. We're the elite, and a lot of us are really having trouble with this. So anyway, bitch. Okay, so let's look at a few other items here. Bonds have been a real puzzle for me. These had a pretty weak day, and these are threatening to bust the support line, which would be kind of bad news, because if bonds get weak, that implies some strength to equities, but at least it'll give us some direction, I suppose. It's still an unknown at this point. They had, back on the 21st, around that lovely little Thanksgiving week, they had kind of broken above this, but that just fell to pieces. So this is a complete uncertain mess right now. One of my lamer trades today was I did go long TBT a bit late in the rally and lost a bit on that. But obviously, if we break that support, then TBT is going to be looking awfully good as they succeed in getting interest rates higher. So let's take a look at a few ETFs here. One I find of particular interest is XLI. And this one, again, if the market would please just stay down, the stop I'd have here is 34.59, just above, sorry, dog interruption. This horizontal line here makes a nice clean stop. Pretty good topping pattern there. So as shorts go, pretty clean one. One item that has gotten a bit away from me, so it's fallen a little too far for me to short now, but I still like it as a pattern, is MBT. Big top here, fall, retrace. I mean, this would have been a great place to short it. It's even on a day like this, it was down nearly 6%. Very handsome stock. Again, I don't want to put up with that much risk, but just pointing it out for what it's worth. And one success I had today, in fact, the thing that made a difference between profit and loss today was one security, because I've just, as a portfolio update, I have 64 short positions, which none of them are big. They all are like about 1% or even just 0.5% of the portfolio. So I'm like 55% cash, 45% shorts, and scattered amongst 64 positions. Anyway, this was one of them. And it's a nice illustration that you can actually manage to find some good opportunities out there. What was going on here with DRI looked very similar to what was going on back here. And I think that's rather more than a little interesting, because I keep bringing up I'm a little obsessed with it, I admit, the 0708 analog. And this fell hard today on huge volume, almost record volume. And I haven't done this yet. Let's just see what happens if we kind of gridify this thing. Let's do a direct comparison of these two events. So let me just move this about a bit here. Yeah, I haven't done a great job lining this up, but yeah, that's pretty interesting. So if we look here, you can see the dip, sort of the one saucer, two saucer, weakening down, and then tumble. So like saucer, weakening down, and then the tumble. So this break here was actually back in late 07, and that was really the harbinger of a deeper drop. So suffice it to say that now and then, these hand-picked securities do work out, and regrettably, this was the one thing that made a difference between a profit and loss. It really shouldn't be that close of a call, but I'm afraid in this market it is, because you just can't count on anything except unpredictable volatility. Anyway, I don't have much to add at this point. I think this week is going to be a real pisser because of the whole Euro conference thing. Maybe once it's out of the way, and then we've got the Fed to deal with next week. So it never ends. God, I'm just complaining today, aren't I? But I'll close with this. I'll close with this one statement. I do have one relatively meaningful thing to say. If you believe, as I do, that the setting aside the tick by tick, setting aside the day by day, setting aside the rumor by rumor, if you believe that over the coming months, relatively intermediate term time perspective, that the likelihood of a market break is far more substantial than the likelihood of a market rally, then all this hand-wringing really doesn't, it's not necessary. It's really not a requirement. If you look at charts like the euro and think it's going to break, if you look at charts like, as I've shown over and over again, the gold bugs index and think that it's going to really do a repeat of the 2008 break, and I'm speaking to myself as much as I'm speaking to you, then all this minute by minute stuff really is just noise. For those who have sufficient courage, and I don't know if I fall in this list, setting up the positions and just doing other things with your life probably makes no small amount of sense. It just takes a certain amount of, shall we say, testicular fortitude to deal with these rallyettes along the way. Okay, that really is it for me today. I'm going to do other things now with my life for the balance of the day. And I'm not even going to bother looking at the ES anymore at night or the euro because you know what? By the time the market opens, whatever you see in the evening doesn't matter anymore. Just don't bother. Go watch a good TV show. Good night.